Okay, well, thanks everyone. Obviously, no fintech conference is really complete without the view of the bank, so this is a great one to have, and we're lucky to have some senior executives here. So we've got Rebecca Licciardi, from NAB. We've got Kareem Al-Bassam from Tryo. Always good to have Tryo here to keep the bankers on their toes. And we've got Macgregor Duncan from Westpac. And I'm Michael Bennet. I'm a senior business journalist and banking writer at The Australian. So this topic of fail fast, I guess banks are often described as these bureaucratic big oil tankers that can't move around too quickly, but they obviously have the capital and the scale advantages. So Rebecca, perhaps you can give us some insight into how NAB's thinking about this issue.
Thanks, Michael. So it's been really interesting listening to some of the insights this morning. It takes millions and millions, hundreds of millions of dollars and many, many years for banks to emulate the agility that we're seeing in the fintech space. So we launched QuickBiz in 14 weeks. And QuickBiz is fully digitised small business loan, for those that don't know, where small business customers can apply for up to $50,000. And it was the first of its kind. I think we beat Wells Fargo by a weekend in terms of an ADI who'd actually released a product of its type. So that was really exciting. So when I think about how you emulate what is this fail-fast approach, and certainly what we've been inspired from in terms of the disruption we're seeing in this space, is how do you corral 35,000 strong employee, a very large bureaucratic organisation, and get it thinking more in an agile fashion. I fear that I might sound like I'm singing from the same hymn book as Shane this morning when I say that it was very much around adopting an innovation culture, and we did that through, in part, the introduction of NAB Labs in early 2015, who I worked with to actually launch the product. So I'm so reluctant to use catchphrases like innovation is part of our DNA, but quite frankly, as kitsch as it sounds, working with customers and ensuring that we were leveraging a very human-centred design approach was absolutely critical to how you launch a product in a very short space of time. And that's where we were able to leverage a very large customer base, twice that of ANZ, to actually do what we were able to do.
Yeah, okay, great. Yeah, and I wanted to touch on, we'll get to innovation labs and hubs a bit later, but Kareem, you've probably got some pretty good insight into this given your background. I think you came from PayPal, which is obviously a far bigger company, to Tryo.
Yeah, I mean, from the Tryo perspective, we've become a full ADI and a full bank, and part of what we're trying to do through that process is not get sucked into the bureaucracy and the silos that are endemic in that banking world. So we're trying not to fall in the hole, even though we do have a bank license. So things change, your compliance changes, etc. And what we've done is we've really kept to our fintech roots. And that means quite a lot of autonomy with our product leaders, a perspective coming from risk and compliance and those sorts of functions that they're service organizations associated to helping things get out of the door. And we've actually have all of our own engineering in-house. We've got about 170 engineers, and they're all grouped together in a concept of tribes with product managers and other affiliated services. And that allows us to really produce at a consistent and fast rate while still meeting the obligations we have as a bank. In the previous life at PayPal, when I spoke last year, we were trapped in a lot of the same things. We looked like a fintech on the outside, but PayPal was really kind of like a bank after 15 years. And we went through many of the same iterations of how do we innovate, how do we create labs and those sorts of things, like the big banks, and happy to talk about that as we go on. Great.
Macgregor, I know since Brian Hartzer took over at Westpac, he's been trying to build this culture of service and technology and digital. I mean, is Westpac thinking about these things, I guess, down the rungs to the same degree?
Absolutely. Yeah, I mean, I think I think all the Australian banks, frankly, all the global banks, are thinking along these lines. It's critical that we continue to develop our responsiveness to trends in the marketplace, and a lot of the initiatives inside all of our banks are along those lines. I mean, I do think there are limits that you naturally come up against. It's just very difficult to have large organisations commit the resources with the focus that is often needed to experiment in that way. And I think that's why you find all of the banks really eagerly looking to partner with people in the ecosystem to fill those particular gaps as well.
And just on those limits you say you come up against, do you think incentives have much to do with it? I remember being at a similar conference and Danny Gilligan from Reinventure made a speech and pointed out how much more incentivised he was to have a lot of these investments to succeed, and how big companies can have problems with that internally, the incentive issue. So are banks starting to actually change their incentive structures to actually incentivise people to fail fast?
Look, I mean, I think incentivisation is obviously a tricky topic for banks, and the banks have got into some difficulties along those lines. So, I mean, I'm not really sure that incentives is necessarily the big structural problem that banks face. It's just, oftentimes a startup can apply a focus to resolving an issue, which is very difficult in the context of a big bank, where you need to have lots of stakeholders on board. You need to get a lot of buy-in. It's difficult to just take it's sort of paradoxically quite difficult to take big risky bets within an organisation. And so, in those circumstances, as I said before, I think banks are much better off looking to partner with people on the outside and looking to utilise the incentives that are structured outside a banking environment in order to pursue those opportunities.
And Kareem, any insights from
the
PayPal world?
I've been very fortunate, and God hasn't made me work at a big bank yet. But from having worked with them quite a lot, there's the money side of incentive that you see, but I often think there's two other things. Some of these were endemic to PayPal, others weren't. But a cultural ability to accept failure within a bank, that can be just a career killer if you work in banks. And so it's, you must be an idiot if it didn't work or it failed somehow, regardless of what was learned and the quality of the outcomes, right? Because actually failing is a healthy thing, as many of you who are serial entrepreneurs here probably know. The other side is, in that big organization, and we had this issue at PayPal, was you can create something that can be agile and fast and achieve wins or capabilities pretty quickly, but when the rest of the organism, the bank or the business, particularly these large ones, see it and it is shiny, what then happens? How do you effectively integrate that thing into the organization where it suddenly enters a world of politics and ownership and not invented here and all these other things, and it gets smothered, right? And you can see this in a number of instances at PayPal. You could look at a number of the things Kaching used. Combank. I wasn't going to say Kaching, but I just did. And those sorts of things. Look at these concepts where their labs or a design build firm is hired to do a really customer-driven innovation project and result, with an actual resultant. And at some point, we did one of those here in Australia for PayPal with the app. It got interesting at a global level or a major corporate level, and it got sucked in and kind of destroyed, right? There's a long history of those. So how do you try to create a culture within the larger organism that's willing to accept that something has been done outside and there are things to learn in the process and not make it politics and territory and all of that?
And Rebecca, do you think the banks are getting better in perhaps allowing failure to flourish, if you like, rather than be career killers?
Well, I can certainly say that I wasn't additionally incentivised when it came to launching QuickBiz. But absolutely. So I think it's a couple of things. I think it's one, ensuring that you've got an ecosystem that you can work within that fundamentally encourages and promotes innovative thinking. And certainly Labs was a massive contributor to that. So my business in particular, so I look after the small business lending product for NAB. And by partnering with Labs as part of that was a key contributor to us being able to bring that product to life in such a short period of time. And we did need to work on a very agile fashion. So it was a case of, and this has been the irony of it, right? When you think about large banks, typically when you launch a new product, it's done on a very measured, thoughtful, considered, and you don't want to take away any of those aspects of this. But you also want to inject a whole bunch of, but learn and learn quickly. When we launched QuickBiz, which was really revolutionary for NAB, we didn't wait until we'd been in market for a few years and we'd attracted tens of thousands of customers before we considered iterating on the product. We did it off the back of 3 customers. So off the back of 3 customers telling us that X, Y, Z, we were able to iterate that solution. And in fact, we've iterated our credit strategy about 19 times since we launched in June last year. So we're actively learning in the market as we go. And yes, do you need the headroom from an executive level to be able to do that? Absolutely you do. But Andrew has been solely focused on creating an environment where innovation is key and how do we adopt an agile methodology. And you can't just ring fence it to a specific area. It was fantastic that Labs was introduced, and it was fantastic that we, i.e. myself and other members of our business community, were getting that support. But the organisation is much larger than that. And when I think about my stakeholder engagement plan that was about 32 pages long, it goes to show that there's still a huge amount of work we need to do when we think about it in that space.
And just on QuickBiz, maybe you can give people a quick rundown on what it is exactly, but it seems like there's been a lot of talk over the years with partnership, with fintechs and banks. I mean, we heard it again a lot today. Did NAB consider, instead of building QuickBiz, to actually partner, as we've seen some of the other banks try and do with some of the small business fintechs?
In the interest of transparency, and because a lot of those people are sitting in the room today, yes, we absolutely did. And we eventually made the decision, and decisions like this do not come lightly in very large organisations with a lot of people who want to have a say about that. When we made the decision to build, it was off the back of a few things. The first of which, as Australia's largest business bank, it was up to us to ensure that we were actually at the forefront of what we were doing in the credit innovation space, and that it wasn't enough that we just followed what was happening in the market. So we actually did partner, and we partnered, and you heard earlier on Ben talk about the work that we're doing with Xero, the work we did with MyOb, by utilising the services and the resources of Demis Data, and through working with Oliver Wyman. So we partnered quite extensively to bring this product to life. So for us, partnering was absolutely critical, but it was to obviously bring together what we felt was important for us in terms of, for our customers and for our shareholders, a market-leading proposition in the small business space.
And Kareem, how do you, as both a bank but also, I guess, a fintech company too, how do you think this idea of partnership will evolve? Because like I said, we've heard it for quite a few years now.
I mean, in the Tryo mindset, our problem wasn't necessarily could we build something that was customer oriented quickly in an agile fashion. That's just sort of who we are. So there wasn't too much thinking of should we partner or should we build. I think it's fascinating to watch these cycles of partnership, self-build, acquisition, and I'm sure consultants make money over time in a perpetual loop, right? Because it keeps going back. So we may see an acquisition in the space by a bank that feels they're a little farther behind, or some partnership, and attempt to do it themselves. And so it's always interesting to watch. Luckily, at Tryo being more fintech than that, we're a fintech that happens to be a bank in many ways. We don't have that problem, so we're able to just go forward and build the product.
And what's also your view on, it was brought up before, the innovation hubs or labs that not just big banks, I guess all big corporates actually are increasingly trying to do internally. And I saw the KPMG annual investment report last week actually pointed out that while globally there'd been a big drop in fintech investment, actually the investment by big corporates had actually doubled. So, I mean, how do you see them? Are they these innovation, I guess, places which you think the banks will succeed from, or is it more a bit of marketing?
Are you talking about like in-house labs? And
Yeah, in-house, yeah.
You know, our CEO at Tryo is a fellow named Gerd Schenkel, who was one of the founders of Ubank. That was a NAB offshoot, and then Telstra Digital. It's hard for very large organizations to make that shift into digital or creating challenger brands. So I think it will exist, and it will continue to exist. I think the problem is how it's not a shiny thing with the patronage of the CEO, and it becomes integrated within the culture and the delivery mechanism of the organization. And I'd probably kick it over to these two to say, how do you do that? Because it's a hell of a problem.
Macgregor?
Look, I think all of these are really fair comments. You know, the one comment that I would just make is that, you know, I think there are obvious challenges for a big organisation to become more agile and more innovative, but we can at the same time fetishize those challenges. You know, I spent 15 years in New York and Silicon Valley as a partner at a venture capital firm, and I know well the challenges in a startup as well. You swap one set of challenges for another. And I'm sure that many people in this room will understand the challenges and the risks and the uncertainty involved in being associated with a startup. And so, you know, I think you know, on both sides of the equation, there is a lot of learning to be done, and a lot of looking at each other in order to get better at what each other is not necessarily good at. It's sort of like in international trade. It's like a sort of a situation of a competitive advantage where people specialise in the things that they're good in, and through partnership and trade, everyone can benefit. And I think, you know, so when people on my team say to me, "Wow, you know, there are so many stakeholders involved. It's so difficult," I always say, "Do you know what it's actually like to raise money as a startup? You know, do you know what it's actually like to get your first customer? It's really, really difficult." And so, you know, so I think sometimes a more balanced view is in order.
And is it just that we are 10 years behind the US? I mean, the offshore fintechs always seem to suggest that. And both from a banking but also fintech perspective, I remember even 3 or 4 years ago, the banks didn't seem as interested in the idea of partnering as they are today. So it seems to be evolving.
Yeah, I think that's definitely true. I'm not sure that Australia is as far behind in fintech as is often said. You know, I mean, certainly from a banking perspective, the Australian banks are a long way ahead of the US and many of the European banks. And that's simply a function that for the last 10 years, we haven't ploughed a large part of our retained earnings back into regulation. You know, we've been able to do a lot of innovative things. So in payments, for instance, Australia's light years ahead of other places. So, you know, as I said before, I think, you know, to my mind, you know, partnership is it is a cliche, of course, but in that cliche lies a good deal of wisdom, I think.
I might just add to that, without stating the obvious too much. There's a good deal of people in this room that at some point in time worked for a bank. And quite often what we forget when we think about really, really large organisations, and what we typically see them as, is this nameless, faceless, you know, juggernaut. And at the end of the day, they're human beings making human decisions for customers every day. And they're like myself, who take that really personally. And so when you start then to invigorate an economy and a community that have taken what they've learnt in a big bank, and some of it's really cool, and some of it's really challenging, and then look to apply that in the broader industry, in the broader infrastructure, then what you do is you get a bit of a groundswell around what people want to actually do, particularly in my space, for small business customers. And so I think a lot of the talk about partnering comes from the relationships and the interconnectivity between people like the people in this room. You don't have that if you don't have a common mindset that inspired your thinking in the first place.
And on that human element, if you like, can you give people in the room a bit of insight, Rebecca, into how the makeup of your team has changed over the years? I mean, Shane mentioned this morning that the European banks he visited saw attracting talent as the biggest challenge. So, I mean, how has your team changed over the years?
That's a really, really good question. So my background, and don't let these youthful looks fool you, I've been in banking for over 20 years. And so I've seen a lot in that time, and particularly in this industry. And certainly it's fair to say that in the last couple of years, I have not seen the pace of change, the pace of disruption that I've seen in just the last couple. And so as a consequence, when you need to think about the people that are going to support you on not what banking looked like 5 years ago, and shifting the focus from being this reactive player in the market and following the innovation of nimble, more agile players, but to actually thinking, what does banking look in 5, 10 years from now? And what do I need to make sure that we're actually staying ahead of the game for our shareholders? And it's about making certain that you've got the right minds around you. I'm happy to say that NAB is a very inclusive, gender diverse organisation. And as a consequence of that, we've been fortunate enough to attract some really, really good talent. That's not to say that we don't have challenges around specific core strengths. Seriously, digital technology pains me in terms of attracting the right resources in that space. But certainly that's something that's absolute focus in our organisation. And then how do you build a culture that fosters but also attracts the right level of talent? What values do you place around that? And how do you ensure that you're getting the right people through the door to do the right things for customers?
Okay, well, I think sadly I'm going to be another moderator who can't work this. But if there is any questions, anyone who wants to take the chance to put some bankers on the spot, go for it.
Michael, does, as far as the panel is concerned, does partnership mean liberation or does it mean control?
Anyone want to jump at that one?
From the bank's perspective or the partner's perspective?
Well, having worked for a big bank, I know it's not necessarily about liberation. It's probably more about controlling fintechs than anything else. But
well, we haven't partnered with a fintech per se. Maybe Mac wants to talk about
sure.
Westpac's experiences with Prosper.
I mean, look, I mean, I've only been at Westpac for 6 months, and maybe to Michael's earlier point, I mean, I hadn't worked a day in a bank before Brian hired me, which I do think speaks to looking to bring in people with different backgrounds. Look, I mean, from my perspective, I run the group's business development function. It just wouldn't cross my mind to want to control a fintech company. I just, I think I just look at this, having sat in that seat before, I'm constantly looking for ways to partner that are mutually beneficial.
I think you get in a relationship with a schizophrenic. It's probably the way to describe it. And there's certain parts of the brain that are about leveraging you and giving you the freedom to bring value into the organization. And there are other parts of that brain at the organization that are about protecting fiefdoms and protecting the silos that they've existed in. And it's a hell of a house share.
Well, I think we've got maybe 1 or 2 more minutes if anyone else is interested in the last question, perhaps at the back.
Hi guys, I'm David. I'm with AltFi here. Citibank put out Citigroup rather, put out a report last year that said that with fintech coming in, US banking staff numbers could dive by 30% over 10 years. I suppose that's one of the less talked about aspects of fintech. If some of these processes are digitized, there'll be fewer staff. Does that seem like a realistic figure to you?
It certainly wasn't in my business case. So for us, when we looked at QuickBiz, the biggest part of that was for 150 years we've been telling small business customers that if you wanted to come and borrow for a small ticket under 50k unsecured, then couldn't you draw on your home loan, or alternatively take out an unsecured personal loan, or even worse, CBAs doing that sort of thing down the road. So from our perspective, we saw that there was a significant level of latent demand in the marketplace that we would be able to capture through the right product offering, and certainly with the right service to back it up. So our proof points were very much about giving access to small business customers that they'd never had before. The point of my comment is that when you do that, when you attract more business, the last thing you're thinking about is productivity or capacity release. In fact, you need more resources to ensure that not only are we continuing to meet the demands of these customers, because invariably there is a much broader scope for us to do so. And so now when we think about what the scope of banking looks like, it's what does our digital expertise look like? What does our digital resource mix look like? And how do we actually ensure that we're attracting the right resources to supplement that? So the changing face of banking has been changing for a long time in terms of the mix of the resources that we attract. I definitely wouldn't agree that we're looking to attract less. In fact, quite the opposite.
Okay, well with that, I think we're being told to wrap it up. So thanks everyone, and thanks for all the panellists.
Thanks.